Hello traders! In this video I would like to show you the importance of Fibonacci levels and the importance of playing by the rules. As this trade on S&P reached reversal zone and been in absolute torture and pain, this is absolutely crucial target, and this is a stop well outside of break-even. Price dancing in this area non-stop for the last almost 40 minutes. You're witnessing on this image the importance of proper trail placement and the importance of respecting reversal zone. By the time you come to reversal zone, you are in significant profit. And here is the famous 2093 on the other trade I've been projecting. Clear on that? Trades are everywhere. How you choose and pick your trade will make a world of difference. We had extremely active market. This is only our second day. I've shown you almost 13, 14 trades. I'm losing count. Every single trade reaching key targets. On the record, this is trade only number 4. Trail very carefully. Famous 2093 is reached. Buyers picking up this theme. That's very powerful reminder why I did not short this market. But what will happen at 2093? Not to be ignored. Very important level. We are preparing for oil news. Let's take a look on oil. Let's see what we're expecting. This is oil. This is S&P weekly. Reminding you the importance of respecting reversal zone time and time again. Sell-off in January ended at reversal zone. Bullish rally came from here. Market been chopping in incredible pain for the last 2 months, once again at historical highs. But this is oil. Bullish rally on oil from reversal zone reached crucial Fibonacci resistance. This is the end of the minor trend on weekly. Are we gonna see phenomenal sell-off on oil? Oil respecting currently very powerful support to the downside. If this support is broken, oil will go into free fall all the way down to 44 level. This is oil weekly. As you witness from emails from my students who've been buying oil from reversal zone, from lowest levels possible, option traders who finished the course, let's review another larger time frame and let's go to hourly on oil. This is oil monthly. All the levels spelled up by the price since 2008 in a play right now. Oil spelled out since 2008. All the events that started playing out in 2011. When oil will reach the reversal zone, the collapse will start. Oil respected the end of the minor trend for 4 years. Once the end of the minor trend was broken, oil went into free fall. Bullish correction in 2015 reversed from the end decision point 2. This is spectacular bullish move, but this level is a problem. So, you know the rules, you know where to enter, you know where to exit, you understand reversal zone on oil monthly, oil weekly, and S&P. Does not matter what you trade. Simply, all you have to do, play by the rules. So let's take a look on oil hourly. Let's see what to expect, as hourly will forever remain the key chart for day trading. While our S&P trade is picking up this theme, currently, almost 5 points later, let's take a look on oil news in 20 minutes. This is where collapse on oil hourly came from. This collapse reached the end of the minor trend. This is where buyers stepped in with vengeance. Quite identical to what you witnessed on S&P hourly this morning. This is the end of the minor trend on oil. We are not shorting near. Shorting into this level is not an option, as I warned you this morning on S&P. Will oil break this level just like S&P done and will head further down? Highly possible. All oil has to do is break through this level with vengeance. Nothing less, nothing more. Response of buyers at this level will determine the rest of the story on hourly. If bearish trend is minor, buyers will step in with vengeance. If bearish trend is major, this level will be broken and price will head here and here. The fact that we are dealing with ultimate weekly resistance is a very big red flag. And pay attention. This is crucial support on weekly. All spelled out by the price many months ago. All the levels on oil in front of you. What happens during the news does not matter to me. I only respect oil due to volatility, as all the levels preset in front of you by the price far in advance. Sell-off started here. So far, bearish trend is minor. Proprietary Fibonacci level is respected. As long as this continues, this is crucial minor trend support. We are not shorting near. Let's see what oil news will tell us. This level is broken, oil will go next to here and all the way down to here. Reversal zone where market will become interesting, as this will be the end of the major trend. This is the end of the minor trend, which on this trade on S&P famous 93 level being respected dearly. And that's pure magic in my humble opinion, as I've shown you this level long before it was reached. And trade on S&P remains stuck at last stopping ground at reversal zone. Once again, trail was placed in very proper place and had not been hit. Ladies and gentlemen, we are out of this trade. 4 to 5 points depending on your point of entry. This is the expectations for oil news, minus 2.5 ME. Oil, unlike any other news, more negative the number, more bullish the news. More positive the number, more bearish the news. Oversupply means oil will drop in price. Oversupply means oil will collapse in price. So, this is background noise, as Fibonacci tells us exactly what to expect. What to expect is, this is crucial support. We're expecting this support. We're not shorting near. If at the time of oil news release this support would be broken instantly, part of a deal. Bearish trend is major. But this is where sell-off had started. This is major pause area, not to be ignored. This level is broken, oil going into free fall. Level in between, decision point 2. Exact same place where we've been taking longs on S&P from the entire morning. Oil news is out, traders, as we discussed. We're at very powerful Fibonacci support on hourly chart and on weekly chart. All these levels spelled out by the price since last year in a play right now. As I warned you well before the news, no one shorting near this Fibonacci support. Is price heading back up to 49.50? Once again, crucial reminder, play by the rules and never ever ever ignore Fibonacci levels. Let's take a look what the news is. news is actually extremely bearish. This is very bearish news because oil has less supply. So how come oil rallying? How is that possible? Bearish news and oil rallying happens all the time. No surprise here. If you understand and respect Fibonacci levels, you always play by the rules. I warned you an hour prior to oil news release. Shorting into the end of the minor trend, not an option. But I also understand the fact it can be extremely temporary. But since we're dealing with weekly levels, this is institutional levels, traders. This is levels not to be ignored. This is a range on oil weekly. And this is what we've done on S&P so far in the last few days in the room. And it's only June 2nd, early morning. This is crucial Fibonacci support to the downside. Will sellers break through this level? Let's go back to S&P.